last week, that will be the 8th week, we anticipated and predicted that the market was going to be a bit indecisive, right? Where the direction of the market may not be readily be known or shown. So we ask that you have to trade or tread cautiously, because the Monday, in fact, the last week's Monday was USC. They had a holiday, and then on Tuesday there was no major news according to the economic calendar, and then on Wednesday, USA had their FOMC, right? Their minutes. In fact, that was a major news, right? So if you observe this, that's from Monday. This is where the market began, right? So we have it, the 8th week here. So when market opened on Sunday midnight, this is how it happened, and then it behaved as if it was going to be bullish or going to be in an uptrend for a long time. It did that, and then it retraced, right? So it retraced, and then on Tuesday we had this. I think Wednesday rather, yes, Tuesday, Wednesday we had this very dip here, right? So if you remember, when I was doing the analysis, I told you because of the holidays, and then we will have a major news on Wednesday. I told you that, in fact, I was not going to give you any major prediction, right, as to whether the market is going to be in uptrend or downtrend, because it's very indecisive. And when you do the observation, in fact, the top-down analysis, we have a mixed predictions, right? We came out with a mixed analysis. We saw it on the higher time frame that it was bearish. Then when we try to tailor things down to the lower time frame, we realize that we are having different kinds of perspective. So because of that, I was lenient, and then I was honest enough to tell you that you have to be very patient, and then maybe after Wednesday you could see how the market is going to move. So this is where the market started moving up and down, up and down. So, and I also told you that I will always say this, that we have a live updates channels, right? Besides the YouTube that I do the weekly, and I put it there for you to come and watch. We have the Telegram pages, and then we have the Instagram, then we have even Twitter, or better still X. So I was doing that, right? So I was very available already on Telegram. I was giving you, sometimes I even give you snapshots of the DXY, what is happening at the moment. Even when there's a pending major news coming, I come there and I update you, asking if you want to still be in it, or maybe you want to withdraw or exit the market. So that was what I was doing. So I realized that in the course of the week, in fact, from Wednesday to Thursday, or even Tuesday to Thursday, I realized that there was another kind of perspective that I was seeing, right? So I had to do another analysis, and then, in fact, alongside analysis. So I realized that there was a general downtrend. If you come to the lower time frame, there was a general downtrend, right? It started from here, the general downtrend. So in the previous week, we were in this fair value gap, and then we was hoping that the market was going to go bullish, but it didn't happen readily, right? So I had to do another analysis, or I was still monitoring the market. That is what a good trader should do. Even after you do your analysis, you draw your markets, you do everything, your anticipation, your prediction, or whatever, you have to still be monitoring your market, because there's something we call the confluence. After doing analysis, you have to check that, is the market actually going the way you predicted, or is it meeting some factors of confluences? And then if that is so, then I think you have the higher edge to zoom into the market, right? You take a bold step and do that. So I realized that even just within and below the fair value gap, we were seeing a general downtrend, a smooth general downtrend. So that was what was going on. So when I realized this, I started updating my channels, the channels, for you to have that idea, that information, so that you don't do things without precaution, right? So I realized this is what was happening. So that was it. So even with my initial idea of the market going upward or being in an uptrend, I had to withdraw and then do another adjustment, readjustment, or another reevaluation. So I realized this is how the market was moving. So luckily for me, right, I realized that trend from here, right? I realized that trend from here. So when I realized that trend from here, what did I do? I did the analysis again, did my markings, my trend lines, the support resistance, and then you see, and then you can see that. So when I realized that thing here, I benefited from this trend. I saw it here. So when I saw it here, I started entering trades from here. So from here to here, you realize that I have what? TPs here. If I put TPs here, that means that trend, I benefited from that movement. And it was a smooth one, right? I think it took 2 days for that smooth downtrend. I enjoyed it from here. So and I came back again and then I exited from the market and I waited from here. Now when I waited here, I didn't rush into the market because I was trying to see if it was going to be the end of that trend or channel. So here there was an impromptu movement here. I didn't catch it. Not that I didn't catch it, but I just wanted to trade with more precaution because I just realized that trend and then I benefited from that trend. So going back, I didn't want to be aggressive trader. In fact, I'm not an aggressive trader. So I waited for it. So when it was even going up, I realized it was going to be what profitable, but I'm not the aggressive trader. And then I just realized I just saw that trend. So I had to what trade with more precaution because it could be that all the benefit that I got from here, if I rush into another trade, I could lose it with this trend again, right? And then when I got here too, I was actually expecting the market to break that channel because going back to this trend, right? Going back with this trend, I realized that the trend has taken a longer time, right? It has actually taken a longer time for this channel. It started from the top somewhere up there, and then it came a long way to this point. So when I saw it here getting to this point, even though there was this kind of bullish, no, this is a Tuesday's bottom. This is a Tuesday's bottom candlestick pattern. If you don't know this, you may get confused. It's a Tuesday's bottom candlestick pattern. And then when you realize such a candlestick pattern, it gives you the higher potential, the higher prediction, the higher perspective that the market is going to be bullish from that side. So I realized it was a good sign for me to enter, but I didn't do it because I just realized the trend. I didn't want to lose the money. So that was it. So I waited for it. And then when it got to this point too, then I did another analysis. So I realized that instead of the trend coming down straight to this point, it didn't. It was trying to consolidate and then just rallying, just moving around the support, the resistance level. And then when it happened that way, I had another. I think I was not comfortable with the way it was moving. I thought it could what? It be a fake out, a fake out. So I was just indecisive. I didn't know what to do. So I waited for it. And then I did this marking here. And when I did this marking here, I saw that, okay, now I think the market is going to move as I want. Then when it got to this point, another confusion happened again. It faked out again and got back to the resistance level again. So as I'm talking to you at the moment, I still have trades that is running over the weekend. From Friday, I still have trades in running at the moment that I'm talking to you. And then the positions are actually what? The buy tap because I'm expecting the market to move this way. But when it got this way, I actually entered the market around this point, this candlestick pattern. And now this candlestick pattern is what? Previous stop. Previous stop, these two is what? Previous stop candlestick pattern. And this one also tells you that when they form around the resistance level, there's going to be what? In fact, a downtrend. If you realize, so that is it. If you don't know this, you still have to go to the channel, you go to the playlist, the beginners. In fact, this is actually treated under intermediate class level. It's very good. If you are a new trader, or in fact, you're a trader and you don't know, you don't have upper hand, the candlestick patterns are not at your fingertips. In fact, you wouldn't actually benefit from this. All your actions will be based on, I'm not saying predictions are bad, but it will be more of like a gambling. You don't even know what is happening. You are just moving and doing things haphazardly, anyhow, because you don't really understand what you are doing. And like I always say, whatever you do, now it's high time you understood everything that you do in forex, right? You begin from somewhere, you move up. So you should understand whatever you do, right? The market can move anyway, anyhow, because of the market players, right? But whenever such things are happening with the market players, you should understand, right? You should accept that, okay, it is happening because of that and that. But in fact, you have to know the fundamentals. You have to know a fundamental, you have to know the basics. That is when you can call yourself a trader, but not when you move anyhow because the market within a few seconds, the market is moving up, you try to follow it, the market is moving down, you try to follow it because you don't know what you are doing. So that is not our main aim on this channel. I always say this. So please check in the description, the page description, the beginners, intermediates, and then we have even the advanced, sometimes explained thoroughly. So please take note of that. So this is what happened up to Friday. So now I'm going to do the analysis for the 9th week. So once again, welcome back to CMG Oral Space Forex Lectures. This is a weekly analysis that we do on DXY and then sometimes on gold. So we give you a market forecast. We give you an idea of how the market is going to move. We are not telling you that whatever we say is going to happen 100%. And for that matter, this channel or this video is for educational purposes, not for financial advice. So you have to take note, and then whatever we tell you, and then thank God we even have the other social media platforms that we update you and tell you what is happening. So this is what we do. So please like, share, and then subscribe to our channel, our videos, and then give your comments. Right. So we are going to do the analysis for the 9th week, right? We are going to be brief on that because the market is quite indecisive, still in the indecisive state, right? So we have to wait for more confluence, more factors that will give you the edge, the higher probability to actually what? Take a step in this what? The pending week, right? So like we do always, we are going to start from the weekly the weekly time frame, right? So that's what we're going to do. Yep. So this is the weekly time frame, right? So generally, we see the market still in what? An uptrend, and then we see the market currently in a fair value gap, tapping into a fair value gap. The last week was, in fact, last 2 weeks, the price tapped into the fair value gap. In fact, the very fair value gap, and then it was rejected massively, nicely rejected, right? And then we have the second candlestick now. In fact, the last week, still tapping in the what? In fact, it has its wick in the fair value gap, right? And then the candlestick forming now, actually, in fact, the current candlestick forming or formed is a bearish what type, right? Now, in our previous analysis, we said we are expecting what? A general movement, a general upward movement for the price to reach this level, right? The price at 106.2, 106 point 106.630. That's where we are expecting the price to get to. Now, once again, we are saying that this price could actually get there, but it could actually take time, some months or some weeks before getting there. If it happens within some few weeks, it means that the fundamentals came in massively. But this is where I'm expecting the market to move before I look for another general or a certain direction, right? So even though we are expecting the market to get to this level, there could still be ups and downs, bullish candle forming, and then bearish candle forming. That is it. That is the general thing. But before we get there, you hold on with this thought, right? This perspective, and then let's look at the current market price, the movement. So the market has tapped into this fair value gap, and then the second one is also bearish, and they're weak in the fair value gap. So even if you should draw a trend line across here, right? It means that the market could actually retrace and may not even get back to this 106 point the 0.6 whatever that we talked about, right? Because we are actually in a fair value gap, and then there could be a trend line here, and the market will actually reverse. So here you have to be very careful. So I'm waiting for the market to actually be rejected from this fair value gap. That is where I can come back again and tell you with more precision, right, that the market is going to go this way or that. So for the meantime, you just have to tread cautiously. So even though you be trading the lower time frame, you should from time to time be checking the weekly time frame, checking the candlestick forming there, and you can take a decision. So now, whatever you are going to, your lot size and whatever amount that you want to buy or sell, you should be very cautious, right? So you see, that is what I can say now. That is it. So we go to the daily time frame. Let's see what is happening there. So the daily time frame too also looks generally. Now, I always tell you about the general movement before I come to the current trend. That is what I do, so that you understand what is happening. So generally, the market is still in an uptrend. If you look at this is the daily one. The market is in an uptrend, even though it moves up, consolidate for some days, right? It moves up, consolidate for some days, moves up and consolidate for some days, right? That is what happens. It moves up and consolidate for some days. This is actually my strategy. I love this kind of trend. I actually benefit from this kind of trend. So this is what is happening. Now, when you get to this very end, now the market looks a bit kind of pulling back, right? Pulling back or retracing. I didn't say it is reversing. There's a difference between a market pulling back and a market reversing. When you say a market is reversing, then actually it has actually taken a full turn, a full new turn. That is a reversal. But when you say a market is pulling back, it's a matter of just moving back a bit, and it will go back to the actual direction. So that is what we are seeing now. Why am I saying this? Now, when you look at this current candlestick, let me just remove this thing. Let me just remove this so that it looks more right. Let me just clean out something. So you see, so if I remove these things, you see what is happening here. You see what is happening. Now we are around the 50 SMA, right? We are around the 50 SMA, and we are just below the fair value gap. It looks as if the market is rejecting it, or the market is actually reversing. But if you look at the candlestick forming here, the current two candlestick forming, they are bullish in nature, and they are what? Of the type called the hammer, the pin bar hammer candlestick pattern, right? The pin bar hammer candlestick pattern. You see what is happening here? Yeah. And these are a bullish candlestick patterns. The bullish candlestick patterns do not, hold on. Sorry. So this candlestick patterns, the last or the current two candlestick patterns, they are hammer. And this hammer are bullish candlestick patterns, right? Prices are being rejected around this bullish candlestick pattern. So they look bullish in nature. So you just have to look out for this. In fact, watch this. Be very vigilant about this. For me, right? For me, even though I'm not going to give you 100% prediction or whatever, but for me, these are very bullish, right? Market could actually bounce back, and then move up massively. And this many a time this happens when you least expect it, right? Because one, the candlestick forming, they are bullish in nature and they are true there, and then they are around the SMA, just around the SMA. So anything could happen, right? So that is where I'm seeing here. So if you look at the 1 week, it looks bearish. The daily looks bullish for me, even though without not looking like 100% what assurance or prediction. That is what it looks at. So there are still a confusion in the two so far. So let me move to the 4-hour time frame. Now, the 4-hour time frame is just below the fair value gap. We are still below the fair value gap, right? The fair value gap. Yet we are around, just around. In fact, surfing, right? There's a term called surfing. Surfing, S-U-R-F-I-N-G, surfing. There's another, in fact, some people have this kind of strategy, right, that they trade. When prices are surfing around the SMA, right, they have a way of what? Anticipating and looking at what it is. So sometimes you watch people, you learn from others, and then add it to yours, right? So I use these things to form my factors of confidence. It's not like I take them out or follow them precisely, but we learn from each other. You understand? This market, you can't learn on your own. We learn from other people. And then, so some people have this as their strategy. So around the SMA is very indecisive. Anything could happen, right? By looking at the bigger picture, the market is in what? It's in the downtrend. Looking at this time frame, the 4-hour time frame, the market is in the downtrend. Yet the prices are around the SMA, right? So, and the prices are below the fair value gap. And this is a bearish fair value gap. So someone could say that we are still in the downtrend. Even looking at the prices generally, we are still in the downtrend. You understand? So the 4-hour time frame, it looks bearish. The daily looks indecisive, right? Even though bullish to some degree. And then the weekly is very bearish. Now let's go to the final time frame that I trade. And that is right. So let's see. So the 1-hour time frame too, it looks bearish, or in fact we are in a downtrend. When I was doing the weekly recap, right? When we just began the video, I showed you that in the downtrend, right? So we are waiting, and the price is actually around what? The support line. If I should draw this, when we saw that, you can go back to the video, right? Or you can even push back a bit. or rewind. Yeah, better to rewind or go back a bit to the beginning of the video, right? We had a channel, a downtrend channel, right? A support and a resistance channel where we had the prices at the resistance level. Now, be at the resistance level, drawing my markings and doing all those, the markings, writing, and then putting some tools on the channel, the prices were around the resistance level. So I can say for now, because I am already in the trade, I can say that I am expecting the market to what move down or sell, right? Expecting does not have any influence on the market. I'm just giving my prediction. The players will have to decide afterwards. So that is the analysis for the week. Now for gold, right? For gold, I'm expecting gold. I am still using the word expecting in quotes for gold to what? Be bullish, gold to buy. But this kind of decision will actually come to pass or be true when DXY moves massively, right? I've told you always that gold can move on its own, right? Gold moves on its own without any massive impact on what? On DXY. It can move sometimes up and down, up and down, up and down, that kind of movement. But if gold will move massively within a day or a week, it depends with some degree on DXY. So that is it. So for me, I don't trade gold without looking at what? DXY. Why do I do this? Because when I trade gold without DXY movement, without DXY impact, I have some kind of doubt, because it means that within that time frame or within that period, gold could be doing anything that you like. Gold can move up and move down within 4 hours. In fact, 1 hour, it can move up bullish and move down to the same candlestick length or size. It happens. So that's what I do. So I don't trade gold individually unless it's on a different account or that account is only meant for gold, or gold is the only instrument on that account. That one I can do that. In fact, I have account that I trade only gold on it. So that one I don't really have to go and look at the extra. But if I have the same pairs or the same instrument on that account, then I have to go in on the same type of trade. So that is it. So thank you very much. This will be the end of this episode. Please like and share, subscribe. And then I wish you a happy trading week. See you in the course of the week on our Telegram pages and other social media handles. So bye for now.